to start recording.
Okay. Okay, well, we're going to get going and we'll record this meeting. So anybody that jumps on later, we can always send it out later. Thank you for spending, half hour, 45 minutes on your Fridays for one of anybody that's logged on. This is an ongoing series we're trying to do every 2 weeks, and we're trying to just get to topics that we hear from clients or that we hear from our referral partners and dig a little deeper into each one of those things. So today's topic, and actually we got this because we had a corporate conference call, I guess you would call it, for an hour with the owner of Keeping Current Matters, who partners with Tom Ferry. And so a lot of information that we have in our slideshow came from them. And basically what we talked about in the meeting, or what they talked about, is, and I can validate this, and Brian can probably validate it, Rachel, anybody that's a loan officer can probably validate this. One of the biggest questions that we get, I think, from clients or people that want to buy a house, whether they own a house or not, is, hey, should I do it? Like, is this the right time? Interest rates have gone up, property values have gone up, even though they've moderated a little bit. Is this something that I should either, even consider doing at this point? And so hopefully there's a lot of good stats in this slideshow that we can provide, that maybe you put in your buyer presentation, or maybe you put in a listing presentation, because I think a lot of it's pertinent. So the first one, the first basic question, J-Val, you can just move it to the next slide, is just, hey, look, should I buy now? Yes or no? I don't know how many times a week I get that question. And I think my answer is, yes. It's better to be the owner than to be renting. And historically, you've seen property values move higher over the course of time. So if you can do it, if you can afford it, then yes, you should do it. I think that's an easy answer for us, because we believe that's the truth. And probably any agent that's on the call is going to believe that is the truth too. So then the supporting information that goes along with that is, hey, look, is it a good investment? So I thought these were some pretty good statistics, and from somebody that has all of those things except gold. I would tell you that for me personally, real estate's probably been my best investment. Like, it's probably performed the best. And this would tell you, stats would tell you that too. So from an investment perspective, most Americans are going to favor real estate versus something else. And I think, you think about that, just some statistics. Like, I think the average homeowner, net worth wise, has a $350,000 higher net worth than somebody that rents a house. That's a lot of dollars, and probably most of that is in equity in a house. That's people's biggest investment. So I thought this was a good slide to share, because I think it's true. And then this, from a price performance perspective, this is going forward. And again, these aren't our numbers. These are just from, the Tom Ferry group. But realistically, a slight decline in values nationally. Now, I think here, I don't know if this is going to be the case. There's not a lot of inventory of houses. I don't know that we're going to see a price decline, but I think nationally, that's for sure possible. There's pockets of places that have gone up a lot. But over the course of the next 5 years, I don't think you see, all the statistics would tell you we're not going to be out of this inventory shortage for a while, because household creation keeps going up. And so I think it's going to be hard for prices going forward to move lower. So, I think a lot of questions that we get from buyers is, hey, look, if I buy now, am I buying at the peak? Are we going to have some kind of crash? Again, until inventory changes, I don't see how that can happen. And then how much of price is actually falling? These are from different places, Moody's, the FHFA, from their peak through December of 2022, and you can see it's not very much. You haven't seen a big decline in values, and again, this is on a national basis. So, if you looked here, you might not have seen any decline in value in that window of time, or you might have seen a slight decline, but not a whole lot of decline of value. The next slide I thought is pretty telling too, because if you're asking somebody that rents, versus owning, where rents have gone, and it's, housing is probably the biggest portion of inflation right now. You've seen housing costs, or the cost of housing and rent, obviously do nothing but go up. And again, with a housing shortage, it's going to be hard pressed to see, a big decline in rents. Maybe you'll see a leveling off of it, but I don't know that you're going to see a decline. I think the other thing that we tell clients is, if you're going to hedge yourself against inflation, if you take out a mortgage, you're fixing the biggest portion of your cost, because you've got a fixed rate, typically mortgage, that is principal and interest payment of XYZ. And regardless of what inflation, if inflation does go up down the road, that portion of your payment isn't going to change. So when people say it's a hedge against inflation, it's not just, hey, we think, values will go up if inflation goes up. It's, hey, you're fixing a big portion of your monthly payment that won't change. Now, your taxes may go up, your insurance may go up. I mean, those are going to change, but that's not generally the biggest portion of your payment. The biggest portion is you're fixing it, so you're protecting yourself against inflation. This one I thought was, I like this slide. Go back to 91 and look at different places, different states. The national average was 289%. So if somebody says, hey, should I own a house? This is a pretty easy slide to say, hey, yeah, like over the course of time, a house is a good investment, and going back in time, that's a lot of appreciation, across just across the country. When we have 285% appreciation in Nebraska, some of those other states, 588, 511, 300%, like those numbers, until we have more houses, I think they continue to move higher. So, if I'm talking with a buyer, this is a good slide to provide to show them, hey, look, look what housing has done, or the value of houses have done over the course of time.
Hey, Eric, can I interject for a second here? I think a lot of clients will say, hey, look, housing prices are up right now, but what if I buy and then they go down, right? Like, people are afraid of that piece. Like, what would you say about that? Like,
Well, here's the truth. Like, housing is an asset just like anything else, right? So we can't sit here and say that housing prices can't go down, because they could. No different than we can't sit here and say, hey, stock price couldn't go down. But if you look historically over the course of time, what values have done or what prices have done, this is the statistic. If somebody comes and says, hey, look, I'm going to be here for 2 years and I want to buy a house, is it the right time? Maybe it's not for that person. Maybe that person shouldn't buy a house. Maybe they should just rent for those 2-year windows, because you can't tell them in the next 12 months for sure what's going to happen. I think, again, it's hard for prices to go down when there's no inventory of houses, and I think, honestly, until rates actually come down, it's going to be hard for the inventory of houses to grow, because you got a lot of people that are just locked in at super low rates. There's another slide in here that's just down the list, that'll tell how many people have locked in at a rate, below 5%, below 4%. And until rates go down, it's hard for those inventory levels to go up, which means it's hard for house prices to go down. I thought this was a good one, because I wouldn't have guessed this, but I think, this is just a testament to what you hear in the news and all the doomsdayers, that we're going to see some housing, crash. And again, this is why we're getting the question, hey, is it the right time to buy? So I think as a mortgage professional or as an agent, I mean, you got to have answers to those questions for clients. You know, you got to say, hey, let me show you the data, because I think this is some of the perception that's out there. You know, and it's one of the bigger reasons that somebody's going to say to me or anybody else, hey, should we buy a house because we think that values are going to go down in the future? So yeah.
So this statistic is higher than what I thought it would be. Like, do you think this is mainly because people remember or old enough to remember 8, 9, 10?
I mean, I think that's part of it. I mean, I think people, the housing, crisis in 2008, I still think that that's pretty solid in people's memory. And so I think part of this percentage being that high is because of that. And I think part of it is just because of the media, like there's so many people out there that are doomsdayers that are saying, hey, crash this, crash that. Like, I watch both sides of the equation. Like, I watch those videos because I want to know what those people are saying. But I think you're partially right, Brian. I think a lot of that stems from, somebody getting burnt in the past in 2008 or having a bad experience. I mean, it's not far enough in the past that people don't still remember it. And so I think that has an impact on what people think. I think that's a good point. Okay, Jay, I'll go to the next one. Okay, then this is just a potential growth in household wealth over the next 5 years, just based on, increases of value. And I think, again, the people that I listen to, the next 2 years, modest growth, or maybe just a baseline, maybe a little bit of decline or a little bit of movement, but not a lot. And then going forward, you just see the slow and steady increases over the course of time. So I think this is a good slide to share with clients too, because it makes the point of what's going to happen hopefully in the future based on what everybody thinks. This is the one I was talking about before. And this is the reason I think that our inventory level is as low as it is. 63% of Americans have a rate below 4%, So I think what happens, in my opinion, you see inventory get bigger. Like in a normal market, rates go up, inventory goes up because you have less people buying. But we haven't had a situation where rates got as low as they did for as long as they did, and everybody locked themselves into something really low, right? And now those people are locked in. The only time they're going to do something is if they have to do something, if they have to move, if they have to get their kid in a different school, if they have to make a decision on, doing something. The people that were thinking about it, I don't know, those people are just going to sit on their hands. So the people that sit on the sidelines, a lot of those houses would have normally come on the market. So I think as rates go down, if I've got a 4% rate and rates go to 5%, it's a lot easier for me to stomach that. And if I'm getting, a house that I want, than it is if I got 4% and rates are 6%, or if I got 3.5% and rates are 6%, So I think as rates go down, as weird as this sounds, like normally there will be more competition, like more people will enter the market because more people can afford it. But I also think there'll be an increase in inventory. So it's just which one increases more, and is there more buyers or is there more listings? So inventory can go up a little bit. And again, goes back, like, I think our biggest challenge, like when I have a client that calls me and they want to buy a house, and I had a closing this morning and they looked for, I think they bought a $450,000 house and they were looking for 4 months, missed out on several houses. The conversations that I'm having, and you guys can jump in and, give your opinion, but a lot of it is the loan is the easy part. Yes, affordability is tougher than it's been before. So not everybody can afford as much as they could before. But a bigger challenge is just like, I got plenty of people that can afford a house. It's just, can they get one bought? Like that challenge, I think is with us for a while yet, you know? I mean, you guys look at inventory numbers and listing counts, but I don't think that goes away until actually you see rates go down. Like, I think as rates come down, inventory level will increase, you know? And I don't think the builders, I mean, I know we got people on here that they're in the building world, you know, they can't build houses faster than they already are. And so you can't add that inventory into the equation without some existing inventory, you know, coming into the market to kind of balance things out. Number of listing counts. I mean, this is on a national basis. So as you can see, it just, you know, it's like stair stepping lower, you know, every year. And, you know, it'll probably get up a little bit this spring. You know, there'll be more people at spring market that gets their house listed. But I mean, if you look at it, it's just kind of a stair step lower, and where we should be, we're a long ways from, you know, being in balance. And again, goes back to inventory numbers, where things are at from an inventory level. I thought that, you know, we had that period of time in October, probably from August to the end of the year, where, you know, you saw houses sitting longer, you saw things taking longer, buyers pulled back a little bit. And I feel like, you know, we're kind of past that now. Rates have been high enough, long enough that that's kind of the new norm. You know, they've kind of forgot that, you know, rates were 3% a year and a half ago. And hey, if I want to buy a house, this is what I have to deal with. And so I feel like we've gotten past that window of time. And now it's just a question of, hey, can we get something bought? You know, if we re-enter the market, can we buy a house? You know, can we get one under contract? And I mean, I think that's the biggest challenge that people have that want to buy a house now. It's not, yeah, it's qualifying for a loan, but it's way more, can I just get one bought? Because we've got plenty of well-qualified borrowers that haven't been able to buy a house because they just can't get one under contract.
Good comment.
I mean, you guys think that? I mean, you guys jump in. I mean, Rach, Brian, tell me what you think.
Chad Ellison put in a comment, existing home inventory in Douglas and Sarpy is up over 400 homes for the first time in months. Hopefully that's a good sign.
Yeah. I think that's good. I think that's a testament to, you know, it's springtime, weather cleared up, it's been nice. And so people have been waiting around. People are getting used to rates being where they at. So, you know, there's maybe a little bit more inventory than there normally would be. I don't know what the new construction part of that is, but it's probably 500-600 houses, or maybe it's more than that. So it'd be interesting to know what that stat is. And then this is just a chart of inventory. And I think a lot of people, to go back to what Brian said, still think of housing crisis. And I mean, just go back and show them the slide. This is just, you know, level of inventory. So again, if somebody says, hey, we're due for a crash, or we're due for a correction, or, you know, they remember those, and you just look at the number of houses that were for sale, you know, in that period of time, and then look at where we are today, you know, like, it's a pretty telling slide. I don't know how you have a housing crisis when there's no inventory. It's just simply supply and demand. You know, if you don't have any supply and you have demand, which I feel like we do, maybe an over demand, it's going to be hard for values to decline a whole lot. Jayba, you want to go to the next one? Okay, 3 conversations to have right now, and these aren't mine. These are you know, basically from Tom Ferry. But go to the next one, Jayba. Expired listings. I don't know how many. I'd love to know how many listings actually expire, if you're starting to see more expired listings. But you know, top 3 conversations you need to be having. Talk with the clients about equity they have in their existing house. I think, you know, that's just reminding people that, hey, look, you have a lot. If you do sell your house today, how much money do you have to move to the next one? Even if rates are higher, if you banked a lot of equity, does it really make a difference? You know, like, does it affect you that much if rates are a little higher, but you have a big chunk of money that you can put down? And then I think, you know, if you're reaching out to your clients that bought a house in the last couple of years, it's crazy how many people that have bought a house in the last 2 years and have texted me or called me and said, hey, we're thinking about making a move. We just want to do the numbers. So I think there's a lot of truth to all of those three things. At least in my case, I would tell you there is. 4 options when their listing expires. I mean, you guys probably already know this, but relist with their current agent, take the house off the market, list the house FSBO. I'd love to know how many FSBO listings there are, if that number is going up or going down with what's happening in inventory right now. And then relist with a new agent.
So Mike, can you ever hear me?
Yep.
Okay. So my experience, because I work a lot with expireds and FSBOs, I feel the for sale by owner market's going down just because in general, for sale by owners are behind the pulse. You know, as agents, we when the market shifts, we can feel it within a week. I feel like for sale by owners are behind, and so they're listening to the doom and gloom of what's going on in the market. Therefore, they're like hesitating to sell the house. So I think that's just my opinion when I'm thinking.
Let's get feedback. I mean, I think from my perspective, I haven't seen many for sale by owner contracts come across my desk. You know, they're all, I mean, a majority of them, I mean, the lion's share of them aren't contracts from FSBOs. I can tell you that. So I would agree with you. I think the FSBO market is always behind the market. And I just haven't seen many contracts come across as a FSBO. The only ones that I usually see is, hey, it's a family to family type deal or a friend to friend deal. But it isn't, hey, I'm actively trying to sell my house by myself. It's, hey, I've found somebody before I even list it that wants to buy it, whether that's a family member, brother, sister, you know, those are the ones that I feel like we see. And then I think said relist with a new agent. I'd be interested to know, you know, how many listings expire and get renewed with the same agent versus a listing agent. I don't know if anybody has those stats, but I'd be curious to know what that number is. Okay, go to the next one, J-Bell. I think when COVID hit, a lot of what we hear, I mean, Brian and Rachel, you can jump in on this too, is the same. You know, everybody for a period of time was wary about buying a house. You know, it's, hey, I was wary about, I don't know if this is the right time because I don't know what's going to happen. I feel like we get a lot of those same questions now because there's just a lot of uncertainty and a lot of differentiating news. And I feel like you had people that would sign contracts and then cancel them. And I feel like we had a lot of cancellations when rates jumped up and people had a signed contract and, you know, rates went up 0.5% in 2 weeks and they got under contract, assumed the rate was this, asked their lender, and now the rate's 0.5% higher. And those people couldn't either qualify or just got cold feet because they were worried about house prices going down and they just didn't want to be in that. And I feel like we get a lot of those same COVID type questions today, more than we've had in the past, you know, hey, is this the right time? And so then the next one, go to the next one, J-Bob. And I think this is a good one to share with all your clients, but 90% of homeowners are glad they bought their home that they're living in. You know, that's a telling stat, you know, because I don't know that you would have thought it would be, wouldn't have thought it would be that high. So, you know, if somebody's asking me, hey, is it the right time? mean, it's a pretty good statistic to show that, hey, look, 90% of the people that buy a house are glad that they did, you know, so your odds of regretting it down the road are 10% versus 90% of, hey, I'm glad I did it. Go to the next one.
Hey, gonna jump in and kind of throw out what some people have said in here. So just so we're in the same area. So Matt jumped in and said, the biggest challenge we have in the Midwest is taking our clients away from the national news. Our market's still very solid. I agree with that too, right? I feel like we're kind of in a bubble here in the Midwest, which is lucky for us, right? We have clients who wanted to see a home today that went live 12 hours ago. It's nearly 250 out west. They have 5 offers and are accepting an offer today over lunch. Yep, we're right back where we were last year. Stephanie Madsen said, exactly, I had a buyer close finally last week and we wrote on 7 homes before we were able to get under contract. Competition is insane under the 250 point. And then Chad, I tried to schedule the same house this afternoon, too late, 18 hours on the market.
Yeah, I mean, we feel all that pain, you know, as lenders, we're trying to do everything for our clients, and probably, I probably spend half of my consultations actually just talking about the market and what it's going to take to get an offer accepted and things that we can do. And I think if you're not doing that with all of your clients and setting the right expectations, you know, you're gonna write a lot of offers that don't get accepted, right? And so I think, you know, one thing that we can do collectively is be on the same page with what we're saying to clients. You know, like we need to be saying as a lender the same thing that you're saying as an agent, and we need to be setting proper expectations for our clients in the beginning of the process. You know, I think if you do that, for one, they're more realistic when they can make decisions faster because they have more information. And I think too, they're more patient. You know, if I say to them, hey, look, it may take you a while to get a house under contract, you know, that's an expectation that not all of them, you know, somebody comes in and thinks they're going to buy a house in 2 weeks. Hey, look, you might look at houses for 2 weeks. You might make 5 offers and not get any of them accepted. And so you just have to be patient, so that they don't get discouraged and exit the market and then sit on the sidelines, you know, because again, sitting on the sidelines waiting, I don't know that that's going to help them. Like, I don't feel like it's going to get dramatically easier anytime soon. I think that you just got to set expectations when you're dealing with clients and doing your buyer's consults and when you're doing your lender consults. I liked this stat too. This, I think, was our last graph, but I thought it was really good. We just got back from our operations summit, and probably one of the things that we will put on our docket and maybe even make it an agent training session is we have a lady in Texas that joined our team who is really good at social media marketing. She's a lender, but her sister runs a company that has to do with social media. And so they got up and talked about the shift that's happening. And I mean, and this is a cool, I mean, I think this is a cool thing for everybody to do. They go, hey, go to your settings and go into your phone and see how much screen time you have. And then look at your top 3, it'll tell you in your phone what your top 3 apps are, whether you're on Zoom, whether you're on social media, and almost always one of those in the top 3 is social media. So they do a lot of background research on demographics of people and who's buying. And I thought this one was pretty interesting, that the group that's buying the most houses are 43 to 57. You know, you would have thought that it would maybe have been this group. You know, that's what I would have thought. I wouldn't have guessed it was somebody that's 67 that's in number 2. You think about it, why are they buying houses? Well, they might own their house free and clear. It's a lot easier to go buy a house and take out a mortgage if you have a big chunk of equity and you're not borrowing very much money and you're not giving up a 3% rate on your loan because you don't have a loan. So a lot of logic to that. Why else are they buying? Because they have money, you know, like maybe they can pay cash, or maybe they can put a chunk of money down where, you know, a home inspection or an appraisal isn't as big of a deal. But I just thought it was interesting because these have changed probably in the last year, you know, who the number one or the biggest group is of home buyers. So I thought that we put that in here yesterday, that wasn't in there before, because that's their statistic, but I thought it was interesting to look at.
I can add something in here too about this. So in talking about the shift, okay, I think that what's really important here is that we have to remember that we have to change how we've been doing business for the last few years, right? We have to shift to understanding who is the buyer now, right? And how do they like to do business, right? So for instance, one of the things that they were talking about was, you know, Google yourself. What do you look like on social media? Because these Gen Zers are going out there and looking you up. Like, what do you look like? Are you on social media? What does your presence look like? Because even though they get referred from a friend or a family or whatever, they're still going out there to see if they can connect with you, and if you look like you're a person who actually knows what they're doing. Like, I think the analogy that Denise gave was, it's like going to a department store, and if you haven't been on social media and you're not actually actively communicating, like, it's like the storefront is closed, right? So I think that's another important thing to be thinking about right now in this market as well.
Well,
So
I think what her terminology is what is your digital strategy, right? Like that's what was her terminology. Like, what is your strategy? Because there has to be some kind of strategy. You know, she's not saying you have to go out and get 1 million followers, but she is saying that people are going to check on you, and what is online is your resume. And I can validate that. Like, I had a guy schedule an appointment with me yesterday that got referred from an agent, and he said, "Hey, I Googled you. You have great reviews. So it looks like you've provided a great experience." I mean, if you don't have that, or if you're not working towards that, you're going to miss out on some opportunities, because don't think that that segment of people is not going to check on you, you know, and they want to like you. Like, they want to know that you have similar interests. They want to know what you have. And that's both the combination of what you do at work and probably what you do in personal posting. So I came away with that, and I'm a person that will do a lot of, I wouldn't say a lot, but a fair amount of stuff in regards to work, but I don't always post as much personally. And so, I mean, I need to change that. Like, I need to more, yeah, I know, J-Val. I mean, I hear it all the time, blah, blah, blah. I got it. But I think that's true. Like, I think we all have to look at that and say, hey, what more can we do so that we can increase our opportunities, because the opportunities, they're tougher. Like, all of them are tougher, you know, like you gotta make the best out of every opportunity. So I think that's 100% true.
Eric, I would just throw out an example for me. Recently, I had a aerospace attorney in Colorado Springs who's getting out of the military, moving his family to Omaha, got referred by an agent, and he was already pre-approved with a national lender, but wanted somebody local. And he basically called me 3 times, left me a voicemail, then went online, Googled me. And he's like, "It's amazing. Every single link online for you works. I can see your picture. I can see your family. I found out you have 4 daughters. I found out what you like to do for fun." And he goes, "Every single link worked. And I booked an appointment for you same day via Zoom. And within 2 hours, we were on Zoom together." And he's like, "You actually look like what your picture looks like. It's amazing. I mean, everything just works." And he's like, so that's a testament to you guys, really, J-Bow, for making everything uniform across everything, because he went to YouTube and he went to Instagram, he went all over the place. So
I think it's exactly right. Like, people are just, they want to be able to relate with you. And so when can click on stuff and it's the same and that you're relatable. And you have all things that are similar and the links work. I mean, it gives them a reason. I mean, they feel more comfortable, booking an appointment with you. Okay, tips for winning. I mean, strategies. And I think some of these are a combination of ours and some of these are keeping current matters stuff. Write an appraisal gap guarantee. I mean, I think probably most of you guys know most of these. Pay higher and non-refundable earnest deposit. Waive the home inspection. Have your current lender call the listing agent. I know a lot of the agents that we deal with, if they're making an offer, they'll tell me and they'll ask me to call the listing agent. A lot of times, I'm not going to get them on the phone, so I'll just make a quick video and give them a summary of the buyer. Hey, this buyer is, we've got their credit, we've got their bank statements, we got their pay stubs, we got all their stuff. And that's a conversation that we have with buyers, like when I have a conversation with buyers, we're talking about these same things so that I can get them thinking about what they would really be comfortable doing, whether that's waiving a home inspection or do it for informational purposes, whether that's, hey, look, if you do find something that you like, we're going to reach out to the listing agent to sell you. I mean, to make you sound as good as possible to increase your odds. Free rent back, I'll see that once in a while. I think that's a good one, that if you have some flexibility is easy for a period of time. Being fully approved, again, when we're talking with borrowers, I tell them, hey, look, I want to be able to tell the listing agent that I have your credit, I have your pay stubs, I have your W-2s, like that there's nothing that worries me about your file. Whether you're 100% approved or I just have all your information to 100% approve you, either way, I can at least say that when I'm talking or when I'm selling you to the listing agent. Waive financing contingency. I see this a lot. I get a lot of people that will say, hey, look, well, how can we do it? Well, let's say somebody they're buying a $500,000 house. They got $250,000 to put down. And I know that I can get them a loan. Like there's no question about that. Could they waive the financing contingency, which really is like making a cash offer? Yeah, they could. Like they're going to get a loan. You're just saying, hey, we're waiving the contingency of financing, which means they're going to buy it one way or the other. So all that means is it doesn't matter what it appraises for. We know that we can get them a loan. They're waiving that contingency. So in certain cases, this is one deals for me, I know, because I've told clients, look, it's not going to, like the house couldn't appraise at a low enough number for me to not get you a loan. So if you remove the contingency, you're looking like a cash buyer. Cash buyer gift options, obviously, those are out there. Pay sellers closing costs. I see that quite a bit too. Not as much last year, but starting to see it more this year. So I think that's our last slide, but I know we got a lot of questions. So Rachel, Brian, you want to jump in on the questions?
Yeah, Lynn Doherty had said offering post occupancy to sellers is a big deal right now, and then which we're seeing quite a bit of. And then Ellison asked, is there a time frame on post occupancy where you start seeing pushback from underwriting?
You're supposed to occupy. That's a good question. You're supposed to occupy the house within 60 days of closing. So, I mean, I would say you can't have the occupants be 6 months. I mean, you could, your lender just doesn't want to know about it. So that's something separate that you do super sneaky behind the scenes that we don't want to see.
Unless it's VA, then it's within a reasonable time period.
Reasonable.
It's not there's not a requirement on 60 days, but yeah.
Okay, so my question to that is insurance companies, I know we don't provide insurance, but homeowners insurance, do they have an issue with extended post occupancies or anything like that?
Oh, that's a good question. I don't know the answer to that. I think we can find out the answer, and when we send out, answer that question, we can ask an insurance agent. I don't think so, but I don't know that. That's a good question, Brian.
I just had one, Brian, that we were able to do the post occupancy for them 45 days later after closing. And basically what they did is just, it's a matter of working with the insurance company to make sure that obviously we have an effective insurance for the people that are purchasing the home as well as then the current sellers that are selling the home. So basically the home is almost double insured both parties and stuff with regards to it.
There you go. That's good. What other questions do we have?
Did I just lose? You guys there?
We're there.
Okay. No, I think that's it. We want to be mindful of everybody's time and obviously want to continue to do this and bring value to you guys. If there's any kind of topics that you'd like to learn more about, we'd love to hear them. And also, if you know anybody else that needs to be on this, let us know. We are recording these so we'd love to share them with you too.
I mean, we stole this idea from one of our other branches and they've been having a really lot of success just answering questions, right? Getting everybody on the same page and just being able to be partners with their referral partners so that everybody's talking the same language when they're talking to buyers. Because I think the reality of it is we all have to be on the same page in this market and telling everybody the same thing. Or you just create confusion, right? And it's pretty chaotic market the way it is. So the more certainty that you can give collectively, I think the better off your experience with buyers or sellers is. So, well, again, like Rach said, we appreciate your guys' time. We'll send this out to everybody that's on the call. And then this is an every 2-week deal. So we're constantly thinking about what things we want to talk about or what things would be valuable. And so we have a list of things that we want. But yes, again, if you have a topic that you thought was pertinent that we could talk about and get clarity around, we would love to hear it, and we could create, some kind of presentation around that. Okay.
Thanks, guys.
I appreciate you guys. Thanks.
Go out and slay the day.
Slay of the day.